Given the size of our economy and the number of businesses it will impact, this will be the single largest indirect tax reform anywhere in the world, which also has the potential to turn the country into one giant market for goods and services. Having said that, the challenges are huge. GST means a complete overhaul of the taxation system for companies. On July 1, India will join 160 other countries with similar tax structures. But with 29 states and 9 million businesses, maybe over that, this will be a complex operation. A collaborative approach where people who have information and share it with others has become very important. GST Simplifies from et.com is an attempt to make that process and transition simpler. Before I call on stage Vice President and Business Head of economictimes.com, Sanjay Sindwani, a quick disclaimer. Since GST is a transactional tax, the impact will be very different for different companies. Our intention is not to provide professional guidance, and hence, very specific questions may be difficult for us to answer in this session. Sanjay, please.
Thank you, Pran, and good evening, ladies and gentlemen. Uh, as Pran mentioned, Economic Times has been kind of catering to the needs of business for a long time. And as we are on the cusp of this big change, which is going to change the lives of people who are into business, trade, services, ET thought that we need to go beyond what we normally do, like printing papers and publishing news, to probably create a platform for the business to interact with the experts and get clarity on the issues, apprehensions, and concerns on this very important topic of GST, where the clock is ticking, and in the next 28, 29 days, a changeover is likely to happen. Uh, we may not have all the answers right now because a lot of things are unclear, a lot of things are evolving, and so you'll have to bear with the experts also and understand that they are also operating in certain areas which are still gray and not as clearly known as probably you would like your answers to be. Before I get into that details, I would like to share that ET has launched a special page which you can access at any point of time. If you have any concerns on GST, you can log in there. There'll be a lot of articles, content, questions and answers, which are already covered. All the events that we are doing, videos from there, recordings from there will be available there. So you can always go back and refer out on that site. If you have questions which remain unanswered after this session, you can again log on to this site and you can post the questions. We will try and answer most of them to our best ability. So I just wanted to kind of apprise of you of that. You can also download our app on which this site and page is available. I know all of you have busy schedules and you have businesses to manage, so maybe logging onto the website is not always the best option, so you can download our app. We had the first session in Delhi, which was pre-19th. 19th was important because that was when the rates were announced for almost 1,200 goods and 500 services in 4 slabs of 5, 10, 5, 12, 18 and 28%. And now I think for us, the next announcement is I think likely to happen tomorrow when more rates are likely to be announced. While GST is a game changer in terms of, it will reduce or simplify the complex tax system, it will create its own set of problems. And some of those will be discussed here today. The big challenge, I guess, is on the uncertainty. Because I think the way we've been doing business is where the change is going to happen. A lot of businesses, especially those who operate at a small scale, did not really bother about maintaining formal accounts and, in a lot of cases also filing taxes. I think that is going to change because if you don't do that now, maybe you will not be able to supply to a certain category of clients that you were doing because they are going to be tax compliant. So I think those are some of the changes that are going to impact you and you need to get prepared for. And the experts here will kind of tell you more about it. And before I kind of take more time, I will just kind of introduce the expert panel today. So we have Mr. M.S. Money. Mr. Money is a senior director of tax practice with over 25 years of experience, mainly in the financial services space. He has led and managed engagements for several complex multi-business clients with operations across locations in India. He specializes in indirect taxes and has addressed various issues across customs, excise, service tax, and VAT. And I think, like all of us, his last few months have gone into studying GST and understanding the ramifications so that he can help his clients and people like us to understand the matter better. Uh, he handles advisory, compliance, and litigation matters across these taxes. He is a fellow member of both the Institute of Company Secretaries and the Institute of Cost Management Accountants of India. May I please invite Mr. Mani to the stage? Our second panelist is Mr. Uday Pimprikar. Uday is a partner at Ernst& Young in India and leads the indirect tax services line. He has more than 15 years of experience in advising clients on indirect taxes, legislations including service tax, excise, foreign policy, and value-added tax, foreign trade policy and value-added tax. Uday has advised clients in various matters pertaining to indirect tax and assisted them in litigation matters by way of drafting and pleading and strategizing. He is experienced in advising clients on complex tax issues, tax planning structures, assessing and strategizing tax risks, guiding through assessments, audit, investigations by revenue authorities. May I invite Uday to the stage, please? Mr. Uday Pimprikar. Professor Varadaraj Bapat. Dr. Bapat is the consulting and has consulting and teaching experience of 23 years, holds qualification in chartered accountancy, PhD from IIT Bombay. He is an all India rank holder at both CA intermediate and final exams. He has written several books and has spent a term at Johnson's Management School, Cornell University, New York. Professor Bapat. Mr. Manish Chaudhary is our fourth panelist. Mr. Manish Chaudhary is the CEO of Tally Education Private Limited, the education subsidiary of Tally Solutions. I guess most of you would be familiar with Tally as an accounting software which helps you solve a lot of your problems. They've had their hands full in the last few months, rejigging their software and making it compliant to GST. Tally Education is India's largest employability company in accounts and trade finance domain with over 400 empaneled centers in more than 200,000 cities. I think their job is going to be to make your job simpler. And I would like invite Dr. Mr. Manish to kind of come and take his seat. So we will start with a panel discussion which Pran will lead. And then we have, I think, about an hour for question and answers. And post that, we have arrangement for refreshments and tea where your question and answers can probably continue if the panelists are there. So I think that's the large, broader format of the questionnaire and the panel discussion. And in case questions still remain, you can always log on to economictimes.com/GST and ask us there and we'll try to answer them. Thank you. Over to you, Pran.
Great. Thank you, Sanjay. So, to kickstart our discussion, let me ask a broader question. Why was GST needed in the first place? So, Professor Bapat, if you want to start.
Yeah, I mean, to an extent, it has been answered in the initial points which were made that we had so many taxes, some 13 taxes, so there will be an advantage in having them all subsumed under one. And there were large amount of transactions which were unrecorded. So what we hope is there will be far more transparency. Everybody would like to promote others to also be compliant, whereas earlier it was not so. And third thing, which was not said till now, is what I feel is till now the accounting was done generally just for namesake, just to comply with something. What we can hope is now people will have advantage of that management accounting system. If they really record the transactions from time to time, they themselves will get lot of inputs, whether for working capital management, whether for cost cutting decisions. And I think that would be a game changer, apart from the taxation issues.
Can I take it? Okay, sorry. There are two reasons which have been enshrined in the statements of objects and reasons for the Constitution Amendment Bill. Okay. And the reasons that have been enshrined are that you create a common market, which India has a common market, and second is remove the cascading tax within the country. Okay. Why was this particular required, or why was this initially thought about? Is as Professor Bapat mentioned, that India, unfortunately, the way the constitution is constructed, has a plethora of taxes that are applicable, but these are exclusive taxes. Exclusive taxes imposed by the state government, exclusive taxes imposed by the central government. And these taxes don't talk to each other. And so, if there is a central government tax that is applied, it's a cascade tax to a state government. So that's the reason why when you procure a manufactured product, excise duty is applicable, but that's a cascade tax vis-a-vis when the product is sold against where VAT, state VAT is applicable. And while for domestic it is still not such a criminal kind of issue that to live with this kind of cascade tax, the problem is that the moment you start thinking about international markets, Indian product becomes extremely incompetitive. And over the last few decades, India is becoming more and more of an open economy. The government quite rightly felt that there is a need for having a tax regime where Indian products can actually compete. Indian products can go ahead and have overall kind of mechanisms where they can go ahead and construct their operations in a more kind of efficient way, rather than just bothering about whether I'm liable to a CST, how to kind of solve that, and so on and so forth. And so that was the primary crying need as to why a concept of GST was sought to be implemented and is so important. Uh, at a different level, when you talk about two sets of governments imposing tax, and talk about taxes that can possibly converse with each other, okay, so that the removal of cascading impact happens, then you needed to go back and see how could they converse with each other, right? I mean, that's the primary intention. And for this to particularly happen, both the central government and the state governments had to give away their primary exclusive rights and share that right of taxation with each other. And that's why the GST kind of created the way it is got created. But the primary reasons, I would think, is actually to have a one common market, and more importantly, remove cascade tax. A lot of people talk about uh, that it was actually also driven by ease in doing business. That's not the primary intention of the levy. And whether we have achieved that ease in doing business as an activity or as an objective, well, I can say it's debatable. But having said that, whether at least for part of the economy, whether it's going to reduce the cascade and whether that objective is being achieved, to some extent, yes. Whether it could have been done better, it's again debatable. But then, sorry, Mani, you wanted to say.
Yeah. I would actually say in terms of the need for GST, or why do we need GST? And I will liken this to telecom. See, in terms of indirect tax systems which are there worldwide, in telecom we have had a 1G, 2G, 3G, 4G, which most of us are familiar with. The 1G equivalent for an indirect tax system is that there are no taxes. So most of you would be aware that large parts of Middle East don't have any taxes, and they certainly don't have any indirect taxes. So that's typically the stage of evolution when a country starts. From that 1G, when they move to a 2G, that signifies that they have a tax which is referred to as sales tax or use tax. Now, this is a very simple tax which is levied at the stage of consumption. There are no credit mechanisms available in this at all. So the 2G equivalent of indirect tax systems worldwide are sales tax and use tax. It might interest many people present here to know that the US, as far as indirect tax systems are concerned, is in 2G. So they are still in sales tax, use tax. Now, having experimented with sales tax, use tax, at some stage, the country moves to 3G, which is referred to as VAT. And VAT essentially refers to a system where some form of credits are available. Credits are not easily fungible. The taxes on goods and services are sometimes kept distinct. So we have migrated to the VAT system until now. So we are, as far as indirect tax reform is concerned, we are right now in 3G. The most advanced system available worldwide is 4G, which is equivalent to GST, where the goods and services tax systems get bundled together. Credits are freely available for both goods and services. So if you manufacture goods but use services as your inputs, you will get a credit of that. If you provide services but procure goods in order to provide those services, you will get a credit of that. So this is the 4G equivalent, which possibly some countries in Europe, large parts of Europe, Canada, Australia, New Zealand, some of these countries have moved into the 4G a few years back. So we are moving into that system, which is today the most advanced system in the world. And similar to telecom again, because 5G still is untested in telecom, so we have the latest technology in India today. Similar to that, in indirect tax also, countries which moved to GST 20 years back are still in GST. So there's no 5G equivalent invented till now. Maybe that will come in future. So one reason why the government wants the whole country to move to GST is that this is the state of the art, most advanced system available in the whole world for taxation of goods and services available. The advantage, again, very similar to 4G. I'll just take a minute more. Very similar to 4G. We have moved into 4G without doing too much of experimentation. The experimentation was done in those countries which experimented with 4G when the technology was not stable. So they had to undergo a lot of transition pains when they migrated from 3G to 4G. In India, we have not had too much of a transition challenge in moving from 3G to 4G, largely because the technology is tested, it's accepted, it's known how it's going to work, and the initial teething problems, someone else has already taken care of that. So we migrated pretty easily. Similarly, in GST, we are taking the advantage of various countries which have moved into GST 15-20 years back. And the government has been working with a lot of countries and with a lot of overseas experts who have been responsible for implementing this in many countries as well. So there is a large team from Canada which implemented GST in Canada, which has been working with the Government of India. Government of India has again taken a lot of inputs from people who are involved in GST in Singapore. So the benefit, as far as we are concerned, all of us as citizens are concerned, is we get a very advanced tax system without going through the trials and tribulations of having to experiment with something and having to do something which has been untested. We are getting something which is ready-made and used in various parts of the world. Does that mean we will not have any challenges? Not at all. We are going to have a lot of challenges because we are a very diverse and innovative country. And I'm sure we'll come to more of that when Pran resumes.
Manish?
I'll just add a couple of points to the what the panelists spoke. If you look at the Rajachalaya committee report, which recommended VAT as a prospective tax regime in the country, it ended with a sentence which said that VAT is a step towards an eventual goal of GST. So GST was envisaged as the eventual goal, since we have since the structure of the country is a federal structure and clearly demarcated rights on what the states and center can tax. Getting to that stage required stabilizing VAT first and then getting a political consensus between different states and center. We need to realize that tax incentives create an aberration in the supply chain. So if you look at certain manufacturing states, they can give away tax incentives to promote investments in that state. And situations like this reduce the overall competitiveness of the country and create an unbalanced growth. What GST does is unify that, remove these tax aberrations, and ensure that investments and the tax benefits flow to wherever they are consumed. So this, I believe, is one of the overall big reasons for why GST has been required in the country. I think another point which comes out is because of GST, at least the way it is being implemented in India, it creates an incentive for people to be honest because being dishonest comes at a huge price. So overall tax levels are expected to be buoyant, and we hope that eventually it will reduce overall tax rates and prices across the spectrum.
Great. So I think from 2006 till now, we've worked on GST and we finally got it. But we still have four tax slabs, uh, and there are issues with that. If I can think of top of my mind, it comes if you take a hotel, for example, priced at 4,999, you would be on a different tax rate. 5,000 and you're on a different tax rate. Uh, why did we have something like this?
Can I? Okay, so let me put it this way. The need for multiple tax rates in any country arises on account of the fact that the income levels in that country are very different. So that is the starting point. Now we have a few countries, and the best example is Singapore. Now Singapore has got only one rate of GST. It's uniformly applied at 7% on everything. There are some things which are not covered by GST on everything else, whether it is goods, whether it's services, whether it is footwear, durables, cars. The rate is 7%. What does that do? That makes it very simple. And some would say that makes it very, very uniform. Can we have that kind of a system for our country? And with no disrespect to Singapore, I'm sure it's a great country. But the size of that country is possibly from Dahisar to Mahim. For those of you who know, Mumbai, right? Now that's the size of the whole country. The population would possibly be western suburbs of Mumbai, right? That would be the population of the whole country. Now, can we compare ourselves with, them? Because we have people who are very poor, we have people who are super rich, and it is an indirect tax. It is not a direct tax. Indirect taxes by nature are regressive in nature. They are not progressive taxes like income tax, where the tax rate depends on what level of income you are in. So by nature, indirect taxes are regressive because they affect everybody uniformly. When they affect everyone uniformly, if we have the same rate of tax across a range of products or a range of services, what would that rate be? So typically in India, that is referred to as a mean rate, which Chief Economic Advisor had recommended. And he had said that rate should be approximately 16%. So just imagine for a moment if we have 16% and we have no other rate, we just have 16% flat. How is it going to impact? On essential products also, it would be 16%. And a high-end luxury car would also be 16%. Now, is that what we want? And therefore, while 4 slabs or more slabs are very difficult to maneuver, they will lead to classification challenges. In future, it will be very difficult for people to navigate. The reason why we have them is because of the kind of consuming section of population and the desire not to burden people with too many indirect taxes. Because being an indirect tax, the price is always embedded in the price of goods. All of us pay this tax without actually realizing it's a tax. So when you go and buy groceries and you buy toothpaste, do you have a dialogue with the shopkeeper where you say, Bhaiya, iska price kitna hai? He says 40 rupees plus 12.5% VAT plus 4% octroi plus 13.5% VAT, and then he says kul mila ke 52 rupiah. Does that happen? You go and pick up and it says 52 rupees and you pay 52 rupees. And guess what? Of that 52 rupees, 14 rupees was various taxes. Now, everyone needs to brush their teeth. And therefore, if toothpaste becomes very expensive, that will lead to a problem from the Health Ministry of India. Now, considering this is why the government has kept 4 slabs. We can have a debate on whether we should have 4, could we have had 2, could we had 5? Some people say we need to have 5 as well. But that's a very long debate. But the reason what I wanted to mention was there is a lot of economic rationale which has gone into having 4 tax rates for India. It is not that this has been decided without appreciating the fact that this is going to add to tax complexity or this is going to lead to classification challenges. The hotel example that Pran gave a minute back, people go and stay in hotels for various reasons at various segments. So when people go on a pilgrimage, they stay in hotels. People who are, let us say, a medical representative, they also go and stay in hotels. And the super rich also go and stay in hotels. Should all of them suffer the same rate of tax? So that is why possibly we have slabs. So while there is a need to have simpler tax structure, simpler tax rates, we should be like Singapore, we should have only one rate and we should have no challenges. In reality, that is something which will cause more harm than good.
And one small point, what he has rightly said is social equality. And one small point, government may want to discourage certain items like tobacco. That's why they are in the highest rate, and there will be also some extra tax on certain items which are non-merit and to be discouraged.
Uh,
I think one additional point why multiple rates have been proposed, apart from what Mani said, which is a very fundamental reason for why taxes should be different, is also to ensure that there are no strong material shifts post transition to GST. So if you look at how the rates have been constructed across items, there's been a strong attempt to ensure that they are more or less in the same range as the rates that they were in the earlier era. Otherwise, as he said, you'll suddenly see a spike in the rates of toothpaste or other regular grocery items. So this just reduces the shock that the economy gets because of the transition.
And I think people don't appreciate the problem that the government has. Okay, when you're ascribing a rate of tax, you're actually trying to translate the tax policy till now. The existing rate structure that we have today, okay, is a result of evolution of tax policy over the last 60 years post-independence, or 60, 70 years of post-independence. And the government needed to go ahead and now start pegging rates to it. Also ensuring that they don't risk their coffers immensely. What did they do? They didn't want to get into too much of debate about what's the right kind of tax and so on and so forth. They treated this as a math problem. Okay, simple enough. What was the effective tax rate today on any product? What's the overall tax baskets that we have? Okay, that has been kind of ascribed today. And then you peg it to the relevant basket which is nearest. That's how they've gone about it. But we were in the North Block yesterday, and we told that actually, as per their estimation, the overall effective tax rate, assuming the same level of compliance that they will end up getting, with the kind of rates that they've ascribed, is actually 1 lakh less, 1 lakh crore less. So the overall revenue that they are wanting to get to the revenue neutral, so the existing basket of revenue that they are looking at is approximately, to my mind, about 11 to 12 lakh crores they are replacing with GST, because petroleum is outside, tobacco is outside, a few sectors are outside or still outside. So that amount is about, if you make next year's with assuming a 14% increase, it's between 11 and 12 lakh crores. With the kind of change that they are thinking about, the total quantum of tax that they will end up paying with the same compliance is about 1 lakh crore less. what they are basically banking on is that the existing compliance levels will actually come up or go up to manage that gap in the overall kind of rate target that they have. And then kind of see toward that even, I mean, actually go up because of the increase in compliance and show some buoyancy. That they are banking on. But I mean, they are actually carrying, if you see, a risk of 10% of their overall collections today. Okay.
So 28 days left for us to get into GST. For the audience here and for companies, A, what do you do in the next 28 days? What can we immediately expect after GST is rolled out on July 1? And what do you think would be the long term impact?
Yeah. Okay, I'll attempt. It's the most difficult question. That's why everybody's joking. Okay, I'm just joking. Okay. Um, if we haven't started looking at what this GST as an animal is, um, start now. You can leave the auditorium and start looking at now. It's quite late. You need to start looking at it very, very fast. Okay. Uh, this is a very, very different set of tax that we are getting into, tax regime that we are getting into, and the kind of compliance that is getting mandated under this particular law is extremely different than whatever you've kind of envisaged in the past. The level of compliances that you do today is going to have a direct implication or direct impact on the person or the compliances of your recipient. It is having a direct impact on the landed cost of the material that your recipient kind or your customer is going to buy product or services from you. And to that extent, this kind of compliance and the linkages that have been kind of mandated in the law has not been even attempted earlier under this law, or maybe in fact in bulk of the globe. Recognize that it's a very different regime. The first thing that you need to quickly go ahead and do, I mean, depending upon the nature of operations that you are getting into, to my mind, the government is going to or should be expected to relax some of the requirements of compliances, I mean, on day one. Okay. The kind of returns, the intensity of the returns to be filed initially, and we'll get through that kind of compliances in a bit of a detail later. But while they would relax some of these requirements, but the basic requirement that you will need to still put in place is how you're going to do invoicing, what is the right tax that you're going to impose, and are you going to go ahead on the invoicing front, impose the right tax, and also are you ready to do the compliances related to those invoicing so that your markets don't get impacted or your customer doesn't get impacted. That I think will need to be the quick priority in whatever you do. Okay. The second aspect or the second basket of activity, and again there will be a significant amount of debate in this and discussion in this panel and otherwise, is what are you going to do with transitional transactions? Okay, transitional transactions. When I'm saying that basket would include whatever transactions which are going to have an impact through the implementation from now till post implementation. Identify those and how you're going to deal with it. Third, obviously, is understand the compliances. Okay. And I'm not even remotely suggesting they haven't kind of done your due diligence, but do your due diligence on your compliances, which means it is, as a concept, this is fairly simple. Set out your revenue items, set out your transactions on the procurement side, define what you exactly need to do for under the compliances for each of those items, and then set out a plan as to how you're going to do it. It is different. Secondly, don't be under the impression that whatever you did till now, okay, is going to apply in the future. a zero-based reassessment of anything that you did in the past or at present through the GST is equally important. For example, do you really want to go ahead and do uh, high seas sales? Okay, when you're importing, is there a need for it? Why did you do it in the past? And those variables equally apply now. Okay, this is again a very simple example that I'm doing. Reassess it. You went ahead and bought stuff interstate, or you went ahead and I mean have a branch in another location. Do you really require it in the future? Okay, do you really require, I mean, which are the vendors you are buying your product from? What is the level of compliances those vendors have? Are you going to go ahead and lose out or benefit from working with certain kind of people or otherwise? Okay, it's again something that you need to kind of reassess and define. So to my mind, three things, if I can summarize again. Understand what this entire animal is. It is very different. Recognize that it is very different. Okay. And go about kind of handling and planning what you're going to do with each one of them, which of the transactions. That is one. Second, recognize the fact that your compliance directly impacts your customer. Okay. And you will actually be out of market or out of business if you're not compliant adequately, or your vendors are not compliant adequately. Assess those risks, define those risks, see how you're going to handle it. Okay, either from the procurement on this. And thirdly, okay, have two baskets to my mind. One is the transition basket, how you're going to plan this through. And fourth, after implementation of GST, have a reassessment and an actual zero-based reassessment of how you're conducting your business. Get the right advice, okay, in each one of these. I'm just not merely extolling the benefits for my own community, but genuinely you'll require that expert advice, or at least advice from people who know this. Go ahead and take that advice and implement it. It's extremely important.
In terms of what needs to be done, or how to go about it, I think the best way for me to look at it, and I'm sure most of the people in Mumbai will agree with me, think of traffic and think that you're driving a car. And if you drive as often as I drive, you'll be able to relate to it very easily. So when you're in traffic and when you're driving a car, what does your speed depend on? Traffic ahead of you, the immediate car in front of you. Now that's your customer. And supposing you put an abrupt brake, right? Your wife or someone else whom you know, Deepika Padukone called, and therefore you press the brake. What happens? That's your vendor. And if you are in a sea of traffic with cars all around you, can you move without their moving? So that's exactly the GST ecosystem, the way that works. Because we are now going to see a similar situation in the portal which is called GSTN. And each of us, our ability to do anything depends on our customer at the front end and depends on our vendor at the back end. If the vendor at the back end is not prompt in doing whatever he does, whether it is uploading the data in time, whether it is taking a registration in time, ensuring that he depicts the correct value on the invoice, ensuring that he dispatches the goods that are mentioned in terms of the classification, anything that the vendor does until now did not affect us directly. We could always say, wo gaadi mere piche hai. No longer can we say that. Because now anything that the car behind you does immediately affects you. And therefore, when you are driving now, you will be focused more on the rear view mirror together with the street in front of you. All along, generally, when you drive in Mumbai, you don't look at the rear view mirror often, right? And sometimes when you need to see, you just see the side view. You never check the rear view. Now you'll be very cautious of the rear view. Every act that your vendor does has the ability to make a financial loss on you. You may lose the tax credit if your vendor is not compliant. And every time you deal with good vendors, people who have taken registration, people who have uploaded returns in time, people who have gone ahead and taken all precautions which they are required to take, the benefit flows to you. Similarly, if you are not GST compliant, you don't have a correct valuation process in place, you have not classified your goods and services properly, you haven't uploaded your returns in time, you have a dispute going on with the tax authority, that affects your customer. That's the car in front of you. And in today's world, if you become a non compliant vendor to your customer, will your customer deal with you? Will he buy from you? So, excepting one or two businesses where we may still have a slightly monopolistic situation, in majority of businesses, there are many suppliers and few buyers, right? And it is the buyer who typically dictates terms. He decides from whom he can buy. So at that stage, your ability to be compliant, your ability to do all the correct things is actually a lifesaver. So when you think of taking registration and ensuring that the returns are loaded in time, that is similar to wearing a seatbelt in the car that protects you. In certain cars, you also have airbags. Now, those airbags in a GST situation are referred to as compliance ratings. Every time you deal with a vendor, you check the vendor's compliance rating. Because if the vendor's compliance rating is not at a high magnitude, you suffer. So, when you deal with any vendor in GST, you start by checking the vendor's compliance rating, and that's a score on a scale of 1 to 10.
So who will give that rating?
This will be given by the GSTN. So 6 months after GST starts, this is going to be uploaded on the GSTN's website. And all that you need to know is to know the GSTN number of your vendor. If you just put that, it tells you what is the vendor rating score. And this score is based on multiple parameters which the government of India has adapted from the government of Singapore, where this works very, very successfully. So, therefore, if you need to get GST ready, if you need to get your preparation started, the way I would look at it is look at it in a way where you say that you are not driving a car on a racetrack where you are alone. You are not driving it on JP Expressway in Noida. You are driving it in Mumbai traffic, where your ability to drive, your ability to reach the destination in time, your ability to catch your flight, and everything depends on what? The cars ahead of you, the cars behind you, the cars by your side. You need to be observant. Only then you will get there on GST, because if you don't do any of these things, you might miss your flight. You might have a financial loss because of what your vendor did. You might also lose out on contracts which your customer is giving you because the customer finds that your compliance rating is low. So that is the way I would look at getting prepared for GST.
Uh, Manish, I would want you to take this question since you guys deal on this subject almost every day. How different is compliance when you guys are tweaking your software now? How many tweaks did you need? And for example, if I am a chartered accountant, how difficult will it be for me to understand what I was doing previously and what I need to do now?
Right. At a very high level, if we look at it, there is a very fundamental shift in how your books are maintained. Till now, in the entire tax regime that we had, the only version of truth was how I maintained my books. And all my filings flowed from that. In the GST era, there's one set of reporting that I am doing as per my books, but there are n number of other parties who are reporting what their transactions are with me. Having said that, GSTN as a common database consolidates and has a unified view of what your business is. It also has connects with customs, with the banking channel, with income tax, and so on, and gives the taxman a full view of what you are reporting to each entity. What this eventually means is it was easier to be non compliant earlier. I could rely on my chartered accountant or my tax return preparer to say, okay, this year I want to pay this much tax. Please prepare my books accordingly. But now that level would become very difficult because people have reported to GSTN and hence to tax authorities what you have purchased and what they have purchased from you. So, to answer your question, one of the fundamental shifts that is needed also is to ensure that the books of accounts that we are maintaining at our end, are fully in sync with what GSTN has. And they are reconcilable to an external third party. So every transaction that flows in my bank, it should be aligned to some other transaction which is reported elsewhere. So I think that's the most fundamental shift in how software is going to change. I also want to take a minute for answering the previous question which we were talking about. I think one of the key drivers which everyone needs to understand, and it has been spoken earlier by Uday and Mani also, is that you need to get to know your suppliers and your customers well. If your supplier has not paid their tax, you will not get input credit. What that means is, in a simple transaction, if you look at it, in a three-party transaction between A, B, and C, as an example, let's say they are transacting, A sells 1 crore of goods every month, and B then trades it further for 1.2 crores, and the next party C sells it at 1.5 crores. At an 18% tax rate, the overall tax liability for the government would be 1.5 crores into 18%. But in between, if B defaults, then A has already paid their 18%, the 18 lakh tax to the government. But B is not able to pass that credit on to the next party in the chain. So C, who was earlier paying only 18% of the 30 lakh that he was adding value as, which is 5.4 lakhs, ends up paying tax on the entire 1.5 crore value, which means an outflow of 27 lakhs. And the tricky part is that he gets to know this only 2 months down the line. So if B has defaulted, his credit will be reversed only after 2 months, which means he has already been transacting with him for 2 months post his default. And an outflow of about 40-50 lakhs additional could potentially kill C's business. So it becomes very important to know who your vendor is, how well compliant they are, and if they are not compliant, then you need to either change your vendor, not either change your, you need to really change your vendor. And the other thing also is, because of such events, one important thing to do is ensure that you have sufficient access to credit. Because if you are running your business on a tight budget, which most SMEs are doing in general, instead of 5.5 lakh tax liability, if your tax liability suddenly becomes 27 lakhs, you need to cough up that amount of cash to remain GST compliant. If you are not compliant, as Mani said, your GST ratings will suffer. You will eventually not be able to find new buyers, or your existing buyers will want to get away from you.
Right. I think there was a recent article which. Oh, right.
Yeah,
Please.
just one more point. I mean, continuing with him. So, complete accounting will be required as he has put in. So, I think the key is also regular accounting. जब ड्यू डेट आया है तो हम कुछ करके रिकॉर्ड करके रिटर्न फाइल करेंगे. The tendency of micro businesses, I think, is almost impossible. In the new scenario, it will be very much necessary to record every transaction almost on daily basis. In fact, on transaction basis, then I think the other things won't be that difficult.
Right. I think if I can take that statement forward, we had a recent article from Tally itself. If I take a loose interpretation of that article, it would mean that every month for someone in business, from the 10th till the 20th, you'd essentially be filing returns and doing something or the other around GSTR1 form and something like that. How true is that?
So, as Professor Bapat said, if the accounts are maintained regularly on a daily basis and honestly, the pressure on compliance would be much lesser, because then it becomes just a normal course activity. If the accounts have not been maintained properly, then it could end up being a really high stress activity. If you look at the number of compliances, number of reports, returns that a regular dealer needs to file, there are basically 3 reports: GSTR1, GSTR2, and GSTR3, 3 returns. The first return is due on the 10th. When you have filed on 10th, then you need to reconcile what everyone else has filed about you by 15th. Then there is an interim date of 17th, by when whatever you had not reported earlier comes back to you,
And
you
this
need
you
to
do
confirm.
every month.
This you do every month. And then automatically your GSTR3, the tax liability and the return will be generated, which you need to pay. The payment is necessary before the return is considered a valid return. So you cannot file the return and say I'll pay later, which is where the earlier point about access to credit came into play. I think one of the things which every trader needs to do is recognize the compliance needs of their own business, ensure that they know exactly how much input is available to them, what they need to do to ensure input is available, and not fully rely on their accountant to create their books. They will definitely need to maintain an accounting software, and I'm hoping most of them would use Tally for it. But the way the construct is designed, you cannot really do it manually. You need to have a software, even if it is an Excel, but a technology solution is needed. What we are also recommending is, a lot of traders are or businessmen are cagey about having their financial status fully known to the tax preparer. And what we are recommending to them is, if they can have people in-house in their family who are not working, who are educated, they can be trained and they can manage their compliances. Then the need for the businessman to spend time on compliance goes down. What they want to do is spend time doing business rather than spend time doing compliance. And if you can have someone reliable who can manage your compliances for you, could be people in your household. A lot of people in the trading community have an educated daughter-in-law in the house who is not really adding any value to the business. They can contribute to maintaining your books of accounts and ensuring that you have more time to spend on your business.
Why not educated son-in-law? Why did I just say daughter-in-law?
So,
One point is you will have to disclose everything to daughter-in-law.
so the key aspect here is, does everybody know what the compliances that are required? Or should we spend some time on kind of detailing the compliances required?
Yeah, I think that'll be helpful. Yeah.
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 Yeah. Okay, let me explain quickly what the compliances that are required. Um, through the month, okay, I mean, whenever you are supplying a particular product or a service, you will need to necessarily go ahead and raise invoice and apply the right kind of tax. When I say applying the right kind of tax is that if you're supplying the product, and I'm trying to get a business which is fairly simple, buying and selling of goods, okay. Or maybe just providing a service, okay. In case you are buying, you're selling goods and you're selling goods locally, okay, then you have to charge tax, which is, let's say you're selling goods in Maharashtra, you have to charge a Maharashtra state GST, okay, and a CGST, which is in Maharashtra, okay, to the Maharashtra government. If you are selling a product from Mumbai to Gujarat, you need to, that's considered to be an interstate supply, like we have in the normal sales tax regime. That interstate supply earlier used to either charge against Form C in 2%, or you would charge the relevant CST. Now, instead of that, you're going to charge an IGST, okay? And you need to kind of go ahead, when you're charging an IGST, you need to kind of refer that the destination state in your overall return, which is the state code of Gujarat, whatever that state code is at, okay? So you'll need to kind of eventually report that and also mention that. But you need to charge an IGST and a IGST Gujarat, if I can call it, okay? What will happen? CGST, SGST will go to the relevant coffers. CGST goes to the central government. Maharashtra state GST will go to the Maharashtra state government. And IGST is collected by the central government, and to the extent that it flows to the relevant to the Gujarat government, the central government will act as a clearing house to kind of go ahead and pay the tax to Gujarat eventually, because now it's a destination based tax, right? Now, if you are selling the product to another registered person, which means a business who's got maybe a turnover of more than 20 lakhs, or even otherwise, he's registered in Gujarat or in Maharashtra, what do you need to do? You need to go ahead and collate his registration number and refer that registration number in your invoice, and again pay the relevant tax, whatever the tax is, right? What we mentioned. At the end of the month, and before the 10th, ideally, right, you need to segregate all your supplies into supplies to registered persons, supplies to unregistered persons. For supplies to registered persons, and I'm assuming that you have raised the invoice with the relevant variables as have been defined. For supplies to registered persons, you need to upload into the GSTN in the relevant format that is mentioned in the GSTN, okay, invoice-wise details of all your supplies. What are those invoice-wise details that you need to, in the minimum, kind of go ahead and upload? Invoice number, okay, invoice date, description of the goods, basically your HSN code of the supplies that you have done, value of the product, value of the supply, the tax rate and the relevant tax. If it is IGST, then it's a combination of CGST, SGST rates, or the CGST or IGST particular rate, the state code, okay, and the customer's registration number along with your registration number. The moment, if it is one, so the moment you upload that particular information and you sign obviously the return at some point of time, like you have for TDS, it is exactly similar to TDS. that the moment you give that PAN number of the supplier that you deducted, the tax that you've charged to the recipient would get logged on to the recipient's registration number. You don't do this, this tax doesn't get locked on, it doesn't get the input tax credit really of this particular of whatever you've charged. If it doesn't, as we have been all been crowing fairly aggressively, the recipient's landed cost goes up to the extent that he doesn't get the credit. So basically, if you're supplying 100 bucks, the tax rate is 18%. Okay, you don't upload this invoice information and sign that return. The recipient doesn't get the 18 bucks as a credit. His landed cost goes up from 100 to 118. Otherwise, it would have been 100. Now do you understand the kind of risk the recipient is taking when he's transacting with you? Right? Again, when there is a supply which is done to an unregistered person, you need to report it on an aggregate basis. Again, but you need to report it, what is the HSN code, what is the supply, which IGST or CGST or SGST that you have charged. Broadly speaking, I'm trying to keep it fairly simple. The returns, you please go ahead and check. So that's the first return that you file, which is this revenue information related to the invoicing that you do, is what they call as GSTR 1. And that due date for filing the return is 10th of the succeeding month. You can go ahead and feel free to upload daily, monthly, hourly, bi-hourly, whatever you want to do, you can keep on uploading that invoice. Okay? What we have been told now is that the moment you upload the invoice, it is not a filing of the return. It is not committed data. But the recipient can visualize whatever you upload as of now. Okay? It is obviously a committed data only when you actually sign that return, which is electronic signing of that return, digital signing of the return, on the 10th or before the 10th, by the 10th of that you do. Okay? Now what happens? You have uploaded your GSTR1, that's gone and this is your sales sales return in a sense, revenue return. Your sales is somebody else's purchase. Okay, somebody else's purchase. The moment you upload this, somebody else's purchase register gets auto-populated. This is very different than what we have today, mind you. We have a J1, J2. J1, J2, you upload sale, somebody uploads their purchase, and then that gets matched. This is not what's happening under GSTN. What happens is that there is only one set of data, which is the sales data that gets uploaded. What are you expected to do between the 10th and the 15th? Between the 10th and the 15th, somebody else's sales data has created your purchase data. Okay? You have to see that is your purchase register matching with that purchase data. There could be several kinds of mismatches that could have happened. Somebody has actually sold that data, they sold something to you, but you have not accounted for it. So it is not in your purchase register. Okay, so it's actually appearing in your purchase register of the government, but you can't see it. Somebody has uploaded a wrong GST number. Okay, it is gone there, it is coming up, and you have obviously not accounted because it's not your purchase. Okay, or the worst thing, you have actually accounted as a purchase, but that person is not uploaded because he just is a fly-by-night operator. He just wants to take your money, 118 bucks you have paid, he's not paid the tax, he's not reported. That I think is the worst kind of a scenario, where your 18 bucks is at a real risk. Okay, and there could be other kind of clerical mismatches in that and so on and so forth. So what do you need to do? From the 10th to the 15th, you go ahead and reconcile your purchase register with what's mentioned in the government. Okay, and then try and amend that particular information with the government to the extent that credit is available, or maybe if somebody is not uploaded, append that particular purchase return and so on and so forth. The moment you amend that purchase register, somebody else, I mean your supplier's sales register is actually changing, isn't it? It's a contra entry. So basically, you've gone ahead and kind of compared it with your purchase register, made such amendments that you're kind of required to do. You can't make frivolous amendment, because every time you touch that purchase register, the supplier's register is getting changed. Okay, that's a contra entry. The moment you go ahead and then look at it, make those changes, then you file your purchase return, which is GSTR2, by the 15th. This is again, please mind you, very different than the J1, J2. J1, J2, you didn't care a damn about what the sales, what your supplier has kind of uploaded. You just uploaded your return, you reconciled it 3 years later. No, you reconcile it now. Okay, create your own purchase register, file it basis what's there in the government information in those 5 days. Okay, once that entire activity is done with regard to this entire matching of that you've done, and you have to do that matching, government is not going to do. Government is not going to go ahead and give you some kind of reconciliation, because the government does not have your purchase return registered, mind you. Okay, the moment you make an amendment, okay, and file that GSTR2, so what you need to do, need to download the auto-populated purchase register that's referred to as GSTR2A, download it, compare it, and then file your GSTR2, which is the amended GSTR2A. There could be other amendments that are there, which is payment of tax on reverse charge basis and so on and so forth. All of that will happen. The moment you amend any sales information which has got auto-populated, there is a contra entry that's happening in somebody else's GSTR1, and that entry is coming up as GSTR1A. So basically your GSTR1 has become GSTR1A. You have to either accept or reject whatever is mentioned in the GSTR1A. Okay, as Manish was mentioning, that's to be done by the 17th. Create your final return, which ideally is a auto-populated return, whatever is the total output liability that you have, output tax that you need to pay on the revenue, minus the credit that is getting populated because of the GSTR you have filed. Okay, the net amount of tax to be paid. That net amount of tax, that's the STR3, GSTR3 to be filed by the 20th, and payment of tax to be made by the 20th. Okay. Any credit notes that you issue, okay, which results in a reduction of your tax liability on the output side, you will need to relate it to the invoice. There are several other things that are there, but having said that, this is the broad compliance that needs to be done. We'll take questions later, but so two things again, very different than the J1, J2 activity that you do. It is extremely real time that you need to kind of go ahead and do. If your sales supplier does not do his own activity appropriately, you need to identify it quickly so that you can either report it or otherwise. And the fourth thing is that the government has actually made you the tax collector. He doesn't upload, he doesn't pay the tax, any of that, your credit gets denied later. Okay. So this is the broad compliance bandwagon that's there. Now with this, probably now we can have the subsequent discussions kind of, whatever that we need to do.
So I just want to add one potential behavioral change that we see arising out of this compliance need. If I look at, so let's say I am a trader. If I am buying from, say, Uday certain goods, my need is that he would have paid taxes on it. He would have told the government that, yes, this is my liability. And then only I would want to pay him. And that's a cycle which will eventually propagate across the business in the country. So there are basically two checkpoints which I can use. If I know that yes, Uday is sufficiently solvent, and he would pay his taxes, then I'll wait for him to file his GSTR1. And when I see my transaction appearing correctly in my GSTR2A, that's when I will want to pay him. If I am not sure that he is sufficiently solvent, then I'll wait for his GSTR3 to be filed, ensure that he has paid the taxes on what he has sold to me, and then want to pay him. What this means is, just imagine a situation like this cascading across the ecosystem. So it basically would increase working capital cycles and increase the bargaining power of relatively compliant suppliers. So I would always want to buy from a compliant supplier. If there is a smaller supplier whose credentials I am not very sure about, I'll extend my payment terms such that till I am sure that my credit is available, I'll not pay him, or I'll pay him partially and not pay him the tax component of my invoice. And just latching back to my earlier point about the increased need for credit availability for the business, these are things which will end up utilizing more credit for every business.
Uh, Somebody, if I can look at GST stands for goods and services, but if I look at the 14 GST council meetings, I think about 12 have been devoted to goods alone, and two to services. Our realm of discussions also generally tend to be around goods. What's happening with services, and are we missing a trick there?
Okay, I think a very good point. See, typically when we talk of GST, goods are capable of being identified. You can store the goods, you can warehouse the goods, you can take it from one place to another. It always leaves a trail. So, making a legislation for goods is in fact simpler than making one for services. Because services being intangible, how do you demonstrate that a service has been provided? Can you store services? Can you have a warehouse where all services are stored? Can you move services from one state to another? How do you export services? So typically these are far more difficult things to legislate than legislating on goods. Pran had mentioned 14 GST Council meetings which have already happened. The 15th one is tomorrow, which until last week we were hoping would be the last before GST is introduced. But we now understand that there will be one more meeting after that, which should be somewhere in middle of June. 14 meetings on goods may not be an accurate depiction because the GST Council meetings which were held between November 8th and January 18th. Now all of us know what happened on November 8th. So during that period, the GST Council meetings which were held were largely inconclusive. So not too much of a discussion, debate or anything happened on them. But keeping those aside, there have been around half a dozen meetings devoted to goods. And there have been just 2 meetings devoted to services. One reason for that is consumption of goods which are taxed is far more prevalent in the country than consumption of services. So goods are what everyone needs, right? So in a household consumption basket, how much money do we spend on buying goods and how much do we spend on services? Possibly we spend 60-65% on goods and maybe 30-35% on services. As far as services themselves are concerned, long back quite a few people felt that at present we have a 15% rate on services which is called service tax, and many people felt that this would mechanically move up to 18. Having a 15% rate, a uniform rate across all services is very good from a simplicity standpoint. From a consumption standpoint, Since indirect taxes in any case are regressive, it is certainly not good. So since early part of January, many of us, including me, have been arguing with a lot of support from Economic Times, where we wrote also, by saying if we can have multiple rates for goods, why shouldn't we be having multiple rates for services? And in the last GST Council meeting, we realized that the government had actually accepted that view. So for the first time, we are now going to have multiple rates for services. We are going to have some services which are exempted, some which are at 5%, some which are at 12. 18% is where, similar to goods, the largest category of goods is classified as 18. The largest number of services are also classified at 18%, and there are a few services which are at 28%. With services, again, we have typical challenges in terms of how do we define the services. How do we define an interstate provision of a service? Those challenges have been taken care of in what is referred to as a place of supply rules. So in GST, we have a separate place of supply rules for goods and a place of supply rules for services. There is similarly a time of supply rules for goods and a time of supply rules for services. All of these together really signify the fact that when it comes to taxing of services, except the fact that services are intangible and goods are tangible and have a physical form, there is no difference in terms of the tax theory. The greatest advantage today to all manufacturers of goods, traders of goods, and providers of services is the fact that since all four rates will be equally applicable to goods and services, if you are a manufacturer of goods and to manufacture those goods, in addition to buying raw material and capital goods, you are also using some services, you will be getting a credit of all of those.
Like advertising?
Like advertising, for instance, yeah, certainly. Like advertising or like training. Similarly, if you are a provider of services, you will also get a credit for all the goods that you procure. Now, this is an anomaly which is being corrected 23 years after service tax was introduced. Because if you look at the provisions today, it is a deep-rooted anomaly that if you are a provider of services, you can get a credit largely of only the services that you procure and of some capital goods. Those are also highly restrictive. But when you are a provider of services, you might need any goods to provide your services. And if manufacturers of goods can get a credit of all inputs, all capital goods, and all input services, by the same analogy, a provider of services should be getting credit of all inputs, all capital goods, and all services. That is what has happened in GST. So when we look at services and relate them to the three returns that have to be filed on 10th, on 15th, on 20th, the objective of filing those returns is to enable you to get a tax credit. And therefore, please don't look at it merely as a compliance requirement or some kind of an unpaid obligation that you are extending to the government. So this is not merely to perform a tax compliance function or to assist the government in tax collection. This is also to help you to get the credits. If you do these three activities, the quantum of tax that you pay as GST comes down. And therefore, by the same analogy, if you don't do some of these compliances or your vendors don't do these compliances, you end up paying a higher tax. Now, does anyone want to pay a higher tax? Nobody wants to pay a higher tax. And therefore, the objective is that you push your vendors to be compliant. Your customers will push you to be compliant. Their customers will push them to be compliant. And in that whole value chain, everyone compels the preceding layer to be compliant. Now, that is the whole objective of GST. And therefore, when you have to do three return filings on 10th and 15th and 20th, please don't treat it as a mere compliance obligation. Look at it as a help us to help you sort of approach that the government says, And the government says if you do this, you can lower your tax outgo. And if you lower your tax outgo, your customer can lower his tax outgo. He lowers his tax outgo, in the final value chain, the outgo of taxes is lower. And that is the reason why, whether we look at goods or whether we look at services, compliance is an embedded part of GST not only in India. Worldwide, the system is the same. For us, it is going to take some time to get used to. But we all got used to not visiting ATMs very often. We got used to Paytm very, very quickly. So I'm reasonably certain that over a period of time, we'll get used to this as well.
Great. So I think we can move on for Q&A, and I'll pass out this mic.
Hello, yeah, I'm Devang. I just wanted to know, is this all you experts had to say on this? Is this covers this subject, or there are some other points which are left out?
We covered, I think, about 3% of the actual stuff. A bulk of it is, I mean, and I'm sorry, I don't want to be frivolous about it. I think it's a good question. I think you clearly kind of pointed out that we were very, very peripheral and maybe 40,000 square feet types. It's very unlike us tax accountants not to get very, very deep into it. But ask questions if we can kind of go, and that's why I said that let's just quickly go to the questions and ask.
My name is Satish. One question, what happens at the very last point of sale? For instance, a toothpaste. The toothpaste manufacturer has to go through the GST process, which means he will have to, reconcile his taxes against his purchases and sale, and finally it ends up in a retail outlet, the shop. What is the impact of GST at that point, at the retail outlet? Because when the toothpaste tube is sold to a consumer, does the retailer have to issue a bill or something like that and get the taxes reconciled at that stage, or he is out of the GST loop totally?
Okay, it's a good question. Okay, and I'll attempt. Money in his traffic kind of analogy can also define it far better, and genuinely does. Okay, what's really going to happen is that at the grocery shop level, okay, either the guy if he's only dealing with individuals like you and me and all of that, he's and his turnover is less than 20 lakhs. Okay, he may choose 20 lakhs a year. Okay, he may choose not to go ahead and register himself. Okay, so which means that he's got this particular toothpaste, okay, with a tax embedded in it, and I don't know what the tax rate of toothpaste is. 18% is the tax rate in toothpaste. Okay, so he's got, and let's say the final price is 118, but he's got it at 98 plus whatever 98 into 18% is. Okay, this is IIT, there are like thousands of people can answer it. This question. His landed cost would be 98 into 180%, basically. And he will sell it at that particular 2% margin and whatever make it, okay, finally to the consumer. He may choose not to kind of pay any tax because he's not registered, he's below the threshold limit. If he's above the threshold limit, but also primarily kind of dealing with guys like you and me, then the law allows him to go get into a composition scheme, okay, which is between 20 lakhs and 50 lakhs, wherein regardless of what he sells, he pays a tax at 2%. 2% and 2%. How much is it? 2%. Okay, I'm really bad at these things. Huh? 1, 2, and 5. Right. 1, 2, and 5. Okay, so he basically then goes ahead and does a composition payment. But that 1, 2, and 5% that he pays on an overall basic kind of nature of products that he's sold, he's gone ahead and made this payment. He doesn't bother about anything more. Okay, He just makes the payment on his gross revenue. The recipient cannot take a set off. The recipient, given that he's like you and me, doesn't want a set off also. Having said that, okay, if I'm a businessman and I buy it from a person who's either an unregistered person or a composition dealer, whatever amount that he charges to me is an absolute landed cost to me. Okay. So if he, let's say, charges it to me at 119 because he's not paid tax on that $2 that he's made or whatever, or $5 that he's made, that doesn't mean his product is actually cheaper. In fact, his product is more expensive, because if I'm a registered person, okay, if I purchase that particular product from him, one is that I need to pay a tax and reverse charge, which I mean, again, this is nitty-gritties that we haven't covered, okay. But on the other end, my landed cost is 918 or 19, as against me buying from a registered person who can pass on the credit, if I can say, where my landed cost is 100. So if a grocery shop is even dealing, let's say 10% or 20% of his material, and purchaser is going to be a person engaged in business, for which he is able to kind of claim a set off. Toothpaste generally may not be a set offable item or whatever, but let's say stationery. You're right. It's a very good example. Yeah. So if I'm, let's say, buying a stationery and the average tax is about 18% or 12%, okay. If I buy it from an unregistered person or a person who's engaged in composition scheme, my landed cost would be 119 vis-a-vis, or 118 or 117 vis-a-vis 100 if I buy it from an unregistered person. So primarily, okay, one is that there are, of course, avenues given by the government, okay, wherein a person doesn't need to really bother about these compliances and not register if he's only dealing with unregistered people. But if a person is going to deal with registered people, then the incentive to register just to save his business, as given by the government, is massively high. Okay, there is a delta of 18-19% or 12% or whatever the rate is that he needs to grapple with vis-a-vis competition who's registered. Okay.
Right. Lady.
Hello, my name is Akshita. I want to ask you, like as you said, you have to track, purchase and sell simultaneously, right? And if my purchase is in June, and we are a manufacturing firm, but we are exporter, and it will take time to procure my goods, 3 months or 4 months, sometimes 5 to 6 months. Then supplier will be in trouble.
So I didn't understand the question. So,
If I'm purchasing some goods in June,
uh,
and my sale is in August, no, not in August, November or
now,
December.
so that also happens today also, right? When you procure an item, okay, you collate tax on that particular item, okay, of excise duty or VAT. You manufacture, you take a set off of both excise duty and VAT. Is that true? And then you claim a refund of it when you export it, or you claim a rebate, whatever you kind of do. The same thing will apply. So there's no trouble. I mean, that credit, once you get it, it's available. The fact is that you'll need to monitor that the person that you're procuring from, is he registered, is he not registered, is he uploaded the invoice, all the stuff that we mentioned. That of course you will need to do. If you don't do, and the supplier does not register himself, obviously then you will be in trouble.
I think if supplier has recorded sale and we also record, then whenever you sell doesn't matter.
Yeah, absolutely.
It will get.
Absolutely.
So as far as the government is concerned, once the supplier has paid his taxes, if you have not filed your return or you have not sold it, you are not utilizing that credit till then. The government has still got their share of taxes on whatever the supplier has sold to you.
I mean, that will kept as credit. I mean,
whenever you sell, then you can utilize it.
Yeah, okay.
But till then, the money is lying with the government.
Can we take a question from that side if someone has? Yeah. You can specify if you want to pose the question to any of the
I am
panelists.
no, I have general question which you can put the highlight on what government has thought about location-based exemption which is presently prevailing.
So there are two kinds of location-based exemptions that are granted, right? I mean, one is given by the central government, which is what I think you're calling
by central government.
which is what you're talking about, or second is the state government. So let's talk about the central government. The central government, the revenue secretary, in a panel that I was on, and actually Mani was also on the same panel, indicated that 52% of the amount, okay, of duty that you pay, I think will be granted as a subsidy, okay, related to that particular supply. Okay, so the government primarily, because 48% of the consolidated fund, whatever tax that you pay, 48% is going to go ahead and reside with the state and gets distributed. 42 goes to the state government. 58 actually remains with the central government. So basically, what he's saying is that today the excise based exemptions are granting on any value add that happens in this particular Himachal and all of that, right? Whatever value adds that happen. Now, the government, if they grant you an exemption, obviously it's not going to help in that entire GST. So they will grant you a subsidy, but the granting of the subsidy would be the quantum of the of the amount that the central government retains. This is what has been mentioned.
Now, how about Jammu and Kashmir regarding that?
Okay, we are getting into a bit of specifics, so let's keep it general. Conceptually, Jammu and Kashmir. So conceptually, this is area-based exemption, is what he's saying. Okay, Jammu and Kashmir, we are kind of desisting from talking right now because I don't know what's really going to happen and what kind of GST will come in Jammu and Kashmir as of now. Okay, the indications are that eventually J&K will effectively come into the overall GST net. As of now, that is not entirely clear.
Further to that, I like to ask specifically, how do we deal with Jammu and Kashmir beginning from 1st of July? Because I have unit there in Jammu and Kashmir. Also, I have here, and I have intercompany sales.
So to my mind, let's see what they come up with. I think let's keep it at that.
Can we take a question from there? From the whoever.
Good evening, everybody. Sir, my name is Kaushik. Recently, just now, you have said that 90 lakhs units have registered for the GST number, temporary number, and they will be getting the new number. And there are only 34 GSP service providers. The date is 1st July. Today we are on 2nd June. Only 28 days are remaining. In your opinion, is it the right time to postpone the GST implementation or to implement?
So I think Mr. Mani can take that answer.
I was waiting for this.
Yeah.
So I think Mr. Mani can also take it.
Okay. I think the question you posed is a very valid question, except for the conclusion that you made. If you feel that we have 90 lakh SSEs and only 34 GST Suvidha providers, just to tell you, 34 was a number till day before yesterday. Yesterday it became 35. But I am aware that adding one does not matter much. There are around 160 more GST Suvidha providers who are presently being evaluated. And that evaluation process is expected to get completed in the next 1 week. So by 15th of June, it is expected we will have close to 200 GST Suvidha providers. Here again, when we talk of GST Suvidha provider, just bear in mind, this is something that the government is doing in order to help businesses and also to ensure that the returns filed into the portal reach the final destination without too much of difficulty. So we could have also had a situation where we migrated to GST without the GSPs. But most probably on 1st of July when we land there, We are going to land there with help from 200 GST Suvidha providers. Also, bear in mind that the first return under GST would be filed in the month of August. So, during the month of July, the primary activity that you will be doing as far as GST is concerned is essentially to generate invoices which are GST compliant. Those invoices again are largely similar to the existing invoices. There isn't too much of a sea change in that. That is what is going to mainly happen in the month of July. The first return and the first payments are to be made in the month of August. Hopefully, by then, even the 200 will have expanded and we'll have many more GST Suvidha providers.
Okay, having said that, I mean, I have a definite point of view on this. Okay, I think it's a wrong question to ask. We are a GSP, Deloitte is a GSP, okay, Tally is a GSP. We haven't seen any flood of inquiries as to what to do with GSPs. The problem is this, okay, whether the government defers it or not, okay, it's a valid kind of concern to have. Okay, whether the government defers it, whether the government gives you a relaxation of initially maybe 3-4 months of filing the returns and so on and so forth, is a matter of debate. The question is that what have you done to be ready on July 1? Have you done adequately your own due diligence? Have you looked at your own kind of activity? Have you got yourself educated? I think to that extent, to my mind, the right question is that what do I need to be ready on July 1 itself and work towards it? There is no point now, genuinely I'm saying, and I'm not being kind of dismissive or whatever. I understand, we are also having several sleepless nights in kind of handling whatever it is. It's a tall ask. But the right question is that what do I need to do to get ready on July 1? Have I done my adequate activity myself to get ready on July 1? That's the right question. Whether the government gives you more 2 months time, it can't give you anyway more than like, it's not 2 years or whatever that I kind of keep on hearing. It is only 2 months. Are you going to be, sir, chalo nahi July 1 pe hua, wo September 1 mein hua. Are you going to be ready even that time? So the point is that, I mean, I'm actually slightly concerned with the fact that there are just so many people who are interested, and we for some time, maybe a couple of months, we all will feel like rock stars because a lot of people come to hear us and all that. Okay, but the fact of the matter is that we don't see too much action happening at the ground level for getting GST ready. That I think is a cause of concern.
Question in the center. There. Okay, we'll come to you.
Hi, my name is Suresh Jain. I would just like to know how safe is our data. The moment we upload the moment we raise the invoice, the data is uploaded. So how safe is it in the hands of either ASPs or GSPs or finally to the GSTN side? And second thing I would like to know is how are we prepared with the broadband? Because everything is online. Are we very well prepared with the broadband or not? These are my two questions. Thank you.
I'll just take the first question first. As regards safety of data, I think, and also to plug to the previous question on GSPs, what we need to understand is that GSP is a highly regulated body with very strong controls that are mandated by GSTN. And it's basically a data pipe. Your data, when it flows from the ASP, which is your application service provider, they have access to your data. The GSP, by law, cannot look at what the data is. It can only look at the metadata, which means it can identify that, yes, this data belongs to Mr. Suresh, this is GSTR1, it has these many kilobytes of data, it has your digital signature, and it will transmit that to GSTN. The GSP cannot store your data at its end. The data is stored only at GSTN. And one of the key reasons why GSPs have been created is so that only limited number of parties have access to the connectivity at GSTN system. Otherwise, you will have millions of people trying to connect to GSTN system, which is basically housing the entire economic data of the country. So it is a headless system to which only limited number of secure pipes are connected. These secure pipes, which are the GSPs, will control any malware flowing into the system, will remove irrelevant data, and will be the first point of uh, ensuring that only clean data transits. Having said that, your ASP will obviously have access to your data. In Tally's case, the client is at the end user, so the data continues to belong to you. And whatever security measures you have on your system are what keep your data secure.
So basically, what I think Manish is kind of suggesting is that there are two kinds of service providers, right? I mean, service providers like Manish, wherein the data doesn't go to an ASP; it just gives an utility to kind of go ahead and do your reporting. Okay. The second kind of activity would be, second kind of service providers is possibly like us or maybe some of the others, who kind of take your data. Okay. Uh, the obviously security of somebody else's data for at least credible service providers is of paramount importance. For us, it's our credibility at stake in a sense. And people who will be credible ASP service providers and GSPs for that matters will obviously built in adequate security measures. So it's a very, very valid point. Okay. To my mind, you need to go ahead and when you're evaluating the person to kind of work with or the tool to use or whatever it is, look at this as a clear and a sensible kind of parameter to look at and evaluate it before working with anybody else. I think that it's a very good point.
Lalit, at the end there, I can see a lot of hands. The lady right at the end, right up there. Yeah.
My question deals with consumers and how this affects the consumers. So you mentioned that compliance at the suppliers end, if that is not complete, then credit is not carried forward. So will there be a situation where different grocery stores will be offering different prices of those goods?
That would be very, very unlikely. And the reason why that would be unlikely actually has nothing to do with tax. It would be more to do with demand and supply and elasticity of demand. So if you have two grocers located in the neighborhood who provide toothpaste at different prices, who will you buy it from? You'll buy it from the person, and you will say that as a consumer, I don't care whether you have complied, whether you took input tax credit, you filed GSTR1. You'll say, I don't, care. So at a consumer end, we don't need to be worried about the compliances at the end of the manufacturer or the distributor or anywhere else, because if they have been non-compliant at any stage, which leads to a situation where they can't get credits, that reduces their margins. They may still need to sell, but their margins would be lower. Majority of products, again, which consumers buy, either have a maximum retail price or have what is referred to as a market operating price. So depending on the MRP or MOP for that particular product, you would always end up buying from the place which has got the optimum MRP or optimum MOP. If that happens to be Amazon or Snapdeal, you'll buy it from there. So that wouldn't largely affect consumers in any way.
But I can add one more thing actually. To my mind, the tax arbitrage or the tax play that people used to do, okay, by saying that we've procured it from a non-taxed kind of pipe in a sense. To that extent, the tax play I think is going to get threatened a little bit, okay, going forward, given the intensity of compliances that are required.
So will this effectively also affect the wholesale market? Will there be no wholesale market?
No, why not? I mean, everybody has a role to play. The wholesale market is not for any tax purposes, to my mind. The wholesale market is for a particular purpose that will remain.
Right. I think we'll move on to the next question. I think the gentleman
I
already
think one
had the
small
mic.
point कि बिल चाहिए तो इतना देना पड़ेगा, बिल नहीं चाहिए तो ले लो 10% या 15% डिस्काउंट, वो काफी हद तक कम हो सकता है बिकॉज द गाय वुड हैव पेड टैक्सेस अर्लियर. आपको बिल नहीं भी चाहिए तो भी most probably it would be only at like goods cost plus tax kind of pricing.
Oh, so
Yeah, Shyam here. I'm a wholesaler. What will happen with the transition stock? Should we buy in June and keep that stock or not? That's what I'm saying. Transition stock and balance stock.
Money, your call.
It depends on what you deal with, because this depends on the nature of the product. If you are dealing with a product whose rate of tax in GST is more than the current rate of tax, and current rate of tax includes excise and VAT. If you are in Mumbai, it also includes octroi. So when you compare these taxes with the rate that the products that you sell are going to be taxed in GST, that is when you will know whether you need to do upstocking or downstocking, number one. And this is to address your question on, do I need to buy more in June or do I need to stop buying in June? So the upstocking or downstocking decision will depend on how your product is taxed now vis-a-vis how it is going to be taxed in GST. As far as transition stocks are concerned, there are two provisions in GST. The first provision is that if you have the bills which are issued by a manufacturer or a dealer, in that case you are permitted to take 100% credit under GST. So on 30th June, whatever stock you have the manufacturer's invoice with you with evidences how much excess duty is paid. You can take 100% credit of that when you sell from 1st July. But supposing you don't have the bill to substantiate that due to any reason, or you may not want to produce the bill due to any reason, in that case you are permitted to take a flat credit of 40%. Now this rate of 40% is what the government has announced. Over the next possibly 1 or 2 weeks, this rate may get revised upwards. Because there are a lot of people who have gone and told the government that in most cases people would not have retained the invoices, and therefore 40% is too low. If the government reconsiders that and increases this rate, then we might get more credit. So I hope that addresses the question.
what?
Do you expect to continue selling in both Maharashtra and Gujarat? So if you want to shut down to Gujarat, this is the right time to shift that stock. 40% on what? No. Today, if you transfer it in the month of June, it is your own stock, right? With the same legal entity. So it is a stock transfer, will not attract any tax today. As on today. You can sell it from 1st July, and if you have the manufacturer's bill with you, you will get 100% credit, even for selling in Maharashtra. If you don't have that bill, you will get 40% credit. Then I have to give you professional advice. Please come and meet me.
Great. Can we have a mic here?
And we'll be very happy for you that you've got an order from Gujarat.
Hello.
Just 1 second. We'll come back to you. We'll come back.
Hello. We are from Builders Office. So, will you please highlight us on the impact of GST on this real estate? I mean, construction of services and that input credit on this and rate of GST on sale of flats, what it is.
Okay. I'm going to be a bit brief on this. Okay. Primarily because I think real estate is, the nuances for every transaction could be different. Okay. So, and our answers are going to be slightly peripheral here. So, please bear with me. Earlier, under the existing law, Okay, what did you have? You had, for a real estate company, what did you need to do? You needed to kind of figure out when that particular sale is happening, basis the time of the sale, whether pre-construction or post-construction. You are liable to apply a service tax and pay a VAT. And if it was a constructed property that was sold uh, after completion certificate, and so on and so forth, you did not pay any tax, right? I mean, that's how it was happening. The exact same broad principles, okay, work under GST. If you are selling a flat under construction, okay, you will be paying a 12%, right? 12% is the rate, right?
12% is the rate.
Yeah. And you will get an entire ITC, input tax credit, on any procurement that you've done. Okay, of course.
Irrespective of any, I mean, whatever we are paying. I mean, irrespective of any.
On the procurement side.
Okay.
On the procurement side. So if you bought a cement and poor you people, you will be charged 28% GST on that. You will be eligible to claim a set-off. The only thing is that there is no inverted duty refund that is available to you. So if your credits are much higher than your output liability, you don't get a refund of that. If you sell a product, okay, after construction, okay, then that's an exempted supply. Okay, and to that extent, in a sense, your credits will get questioned. Now, there are several issues on this. Okay, I'm being very peripheral, and this actually, sir, is in the 2% bracket, not even 3%. But the fact of the matter is, broadly, the principles remain the same. And you need to genuinely, I mean, I'm sure you would have engaged somebody, but you please need to go ahead and look at both transition and the subsequent kind of activity that you're doing.
Great. We'll take two questions, one from this side, one from that side. Someone from that side. Yeah, the gentleman there. Right in front.
So we are the importer and we have imported various materials and that are lying with us. So what will happen on the 1st of July?
Okay.
You filed a bill of entry?
Yes, we have already filed the bill of entry.
Are these products purchased within a year?
Yeah, they are purchased after the 1st July.
So then you will get the eligible duties of credit, okay? In
CVDT and SAD and all the thing.
Yeah. So you should be able. Now again, don't get me and laugh.
No.
But depending upon, with all the caveats that we all consultants give,
yes,
okay, you should be okay. Provided you've got a original bill of entry, you've gone ahead and kind of paid that duty in your this, then you should be.
And we are buying something from the merchant importers also. What will be the position in that case?
Depending upon the document that you have. Okay, I'm sorry, I mean, but depending upon the document you have, please look at, again, Mani mentioned it earlier, if you've got a excise duty or a duty paying document, okay, from either of these guys. So if the importer is a registered importer, excise registered importer, okay, a first stage dealer or whatever it is that you have, okay, if you've got that relevant invoice, you should be eligible to kind of take that credit. If you don't have, okay, then you need to kind of worry about and then figure out.
Only VAT is there, invoice there, then also I will get full credit?
Nahi bhai.
Nahi. Thank you.
Okay. The fact is that VAT anyway credit balances you take. So fine. Those credit balances. Yeah.
Hello. You explained about this 10th, 15th, 17th and 20th. But what happens if suppose my customer doesn't pay me or the material gets rejected? Then what happens? Do I have a chance to cancel that invoice and take a refund?
Okay. If your customer, okay, and I'm assuming your customer is a business and not a consumer. If your customer is a business, whatever you sell, a sale return from a business is considered, it's deemed to be a supply back from that business to you. So that customer, while having the audacity of returning your product, also needs to raise also needs to issue an invoice passing back the tax that is charged to you. It is deemed to be a supply. So he raises an invoice and you get that invoice. You please ensure that. If he doesn't pay, okay, anyway, whatever happens today happens later. It doesn't mean that the government is going to fund you. You are going to fund the government. So the moment you make the supply, you make the payment of the tax. It doesn't pay, then it is a bad date, your funeral. And it happens today also.
We'll take two questions. We're completely out of time. One from here. Anyone here? Okay. Lots of hands. Someone there. If someone can pass the mic there.
It's on. No, it's not on. I think it's on, you can ask.
It's okay. We can just. Yeah.
It's a big question to ask, but you can just answer.
You are asking a consultant, damn difficult.
What is the position of job worker in GST and a contract manufacturer in GST?
Okay, as I understand, okay, a job worker takes the product. Again, I'm defining what the job worker and contract manufacturer as I understand it. A job worker is a guy who gets the product, processes, he doesn't own the product, and then sends it back to whoever, okay, and a job working arrangement. A contract manufacturer is a person who manufactures, sells the product as per the contract, and the other person gets the whatever and so on and so forth, okay. A person who's acting under job working will need to charge for his job working services a tax applicable, okay, which is at 18%, okay, on his job working services and charge it to the principal as a service, okay. The movement of the product, okay, under the law, again I'm being very crisp and peripheral, is not liable to any tax, okay, the movement of the product. And given that you don't own the product, okay, when you're as a job worker, you don't, when you supply it also, like in manufacturing, you needed to possibly pay, or you're working on a job working exemption and so on and so forth. Basically, in this entire case, the only difference between the past and the future is that today your manufacturing activity was not liable to any service tax or so on and so forth. You paid either an excise duty or returned the particular product back to the principal. Tomorrow, you will need to go ahead and charge service tax on your job working activity or a GST on a job working services that you are charged. The actual collation of the credit and payment of the tax technically will be done by the principal itself. Okay, there are avenues to kind of change it, which is fine. On a contract, is nothing but purchase and sale.
If I say that what is job work described in GST is nothing but the replica of 214/86. Because I could not find any place of which is being discussed contract manufacturing. What I mean is a loan license arrangement, which is being practiced in pharma and FMCG companies.
Right, which is purchase and sale in a sense, because you
it's
pay
not
the
purchase and
duty.
sale. If I am the principal, if I am the brand owner, I give inputs to a company located in say in Gujarat, and I tell him that you manufacture this product for me, and then based on my instructions he clears it.
Okay, so then in that case, that's the job working arrangement that is being prescribed under the law. That's the job working arrangement.
I would just like to add, it is 214/86, but read together with Ujagar Print's decision. So if you read 214/86 and also read Ujagar Prints, that is the sum and substance of the GST provision with certain changes in terms of the principal manufacturer's liability in certain cases.
Agreed, that is what I understood. But
that's the summary.
Contract manufacturer, I haven't found any place in GST.
Right.
नहीं सर, वो by and large मेरे हिसाब से जॉब वर्क की आप जो बोल रहे हैं कॉन्ट्रैक्ट मैन्युफैक्चर जॉब वर्कर should we could cover and look at working under the job working specific kind of this under the law.
So I think we'll take the last question. Gentlemen here, we're completely out of time. Yeah, right here.
You can bribe the guy now. Where to pick?
Hi, I am Pankaj. Would like to know the registration requirement in terms of service providers, especially central service providers who is having, let's say, a registered office in Mumbai from where billing is happening, and let's say sales guys at Delhi who sells to the client, and let's say it's a sort of platform which has been developed in Bangalore. So from where this billing should happen in terms of GST, and what is the requirement with respect to registration of it? Currently, it is being billed from let's say Mumbai, and service tax is being paid from Mumbai. So what is the requirement in GST? In that
Okay,
case?
it's a very simple question. It's, whatever. I'm just saying, why I'm being is that this is the biggest issue for any service provider. Okay. The law is this: every state, every place of business needs to be covered under registration. So if you've got a place of business in Bangalore, you need to register it. Okay, if you've got a place only in Maharashtra, then you'll need to obviously register only in Maharashtra. Where you raise your invoices by itself does not have a direct bearing on where you need to pay the tax from. The law defines location of supplier of service to mean any place from where he provides the service. And if he's got more than one establishment, the establishment which is most directly connected with the provision of service. But let's say if you have got a cloud service, okay, which is, and I think that's what you're kind of mentioning, okay, where you can't determine from where you are providing the service, there is a clause which is there. Then the government has suggested then that's the head office where you can't determine from where the service is being provided. My sense is that whatever you do, okay, when you have to determine where that particular service is being provided, the actual provision of service, because in a cloud kind of an activity, when you're saying sales guys don't actually go about selling the service, they actually are marketing guys in a sense. They're not, right? Because a guy goes online, buys the service and so on and so forth. Right. So to that extent, if it is a cloud service, so to my mind, I'm not giving an answer whether it's head office or not, so please don't take that as an advice. What I am basically saying is that to determine from where you need to pay the tax, okay, you need to map out what are the various activities done by each establishment, okay, and then basis which establishment is directly connected with the actual supply of that or contractual arrangement in a sense, may be considered to be one of the avenues to kind of decide the establishment most closely connected with that supply. Okay. Am I been adequately vague enough?
I think we'll take just one last question, completely out of time.
Yeah.
Hello? Yeah, one question is that I'm not into moderate but into manufacturing. I've purchased the goods with excise. So can I pass on or can I get the credit of that excise in GST when I sell it in July?
So you're not into moderate, why?
At present I'm not in moderate, but
okay,
I've purchased the goods with excise.
So you should,
if I sell the goods in July, so should I get the credit of that excise in July?
You have excise duty paying documents with you?
Exactly, yes, I do have, yes.
What you need to do is that as and when you register, which is from July 1, assuming that's the implementation date, you need to go ahead and clearly define what the inputs are. Okay, raw materials are.
Right.
In your kind of setup.
My stock, yes, okay.
And then allocate the excise duty element on that input raw materials that are there in stock. Semi-finished goods inputs.
Right.
You need to go ahead and be very, very careful about how you're documenting it because you'll need to demonstrate it as and when the assessments happen.
Right.
Basis those excise duty documents related to these particular products of raw materials, you should be eligible to claim the set-off. This is very easy. Documentation is going to be extremely important. So please engage with somebody to go ahead and look at this, get it certified, and
certified by whom?
By chartered accountant, cost accountant. I don't want to be only partial to chartered accountants. So.
And one more question. I'm into manufacturing and you said service input you can take it. Okay, now electricity bill. And
electricity bill
will not have my GST number. How do I take the input?
Okay, power is not outside the GST net, but I understand your drift of it.
Okay.
Let's say a telecom provider doesn't have your registration number.
Right.
How do you get it? You provide go engage with your telecom provider, provide your registration number to him so that he can raise the invoice mentioning your GST registration number. For onboarding you as a customer, who is registered, the telecom service provider would do some amount of due diligence, like a KYC. You will need to do all of that to put it in place. Reliance Power is outside, so please don't bother Reliance Power.
So I think
no, Reliance Power is outside GST. So please spare Reliance Power for the moment.
So we would have loved to take more questions. We are completely out of time. The panelists will be there after the session in the tea area. You'll also get a feedback form which you'll need to fill it up and give it to one of the promoters around. For the closing speech, I would like to call on Sanjay Akin back to the stage.
So I think, and I hope we had an interesting session where a lot of queries probably got answered. I think I got a lot of learning in this session, even though I'm neither into manufacturing nor service. So I think it's a good learning experience for me. On behalf of ET, I would like to thank all the panelists for sparing their valuable time and coming here. I would also like to thank the IIT Mumbai eCell for helping us with this auditorium and supporting us with the activities out here. Before I kind of end this round, we have small token of our appreciation for the panelists. If I may just request my team to kind of hand over these to the panelists. Once again, thank you to all of you. I think we had a very interesting session with a lot of interesting questions. We can continue the discussions outside. We have arrangements for tea and refreshments. Please join us and let's continue the discussions. Thank you.